Well, everybody, I don't know if you've heard, but apparently PayPal is a dead business. That's right. The stock fell, hit new 52-week lows, and therefore it's a dead business. Haven't you heard? Apple Pay is going to put them out of business. All right, well, that's one perspective, but I would like to check that story against the facts and see if this is really a dead business or not. Exhibit A, when it comes to PayPal, is the revenue, okay? So, 2013, something like $6.7 billion worth of revenue. Not bad, you say, but 2022 saw $27.5 billion in revenue. That's a pretty solid growth trajectory over one decade. Now, granted, more recently, revenue growth has slowed down. It hasn't stopped, but it has slowed down. But let's look at the context of what's going on. People have been skittish. Interest rates have been up, inflation's been high. What that means is consumer spending may be a little bit on the soft side, which will affect the revenue for a company like PayPal. Next, you might be thinking, hey, I bet they're just massively diluting shareholders in order to stay afloat like every other dying business out there. These guys are practically tattooed chef, after all. Well, actually, it looks like the share count has been slowly decreasing over time with some modest but steady share buybacks. Frankly, at the current prices, I hope they devote more of their free cash flow to buybacks because I think that's the best way that they'll be able to add value to shareholders if the prices stay this low. Next, you'll say, oh, but hey, nobody actually downloads the PayPal app on their phone anymore and uses it to send money back and forth with their friends. Well, that actually doesn't really matter as much as you think. So the fact of the matter is that while PayPal is PayPal, they are a lot more than PayPal. They have a family of brands, okay? Braintree, which I keep hearing more and more about, Chargehound, Happy Returns. Some of these are actually kind of new to me. I hadn't heard of them before I had pulled up this page. Paydy, Hyperwallet, Honey. I remember I used to see advertisements on this. It's the thing where it finds like discounts or savings for you when you're like online shopping. Zoom with an X, not with a Z, not to be mistaken for the video conferencing software. Venmo, which when it comes to peer-to-peer, just like sending your money to a friend real quick, pretty much everyone I know uses Venmo because it doesn't matter if you're on Apple or you're on Android or anything like that. It's just quick, simple, easy, boom, 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 send it on its way. Simility and Zettle. So they've got all of these different business segments, some of which are more kind of on the back end, on the merchant side, and you don't even really see them when they're at work. Of course, there is still the old-fashioned thing where you can, check out with PayPal when you're doing your online shopping and such. That's still offered on, I think, the vast majority of e-commerce sites. So from that perspective, I really don't think PayPal is a dead business. And even if you have something, against the actual PayPal app itself, it's more than just PayPal. Looking at the analyst price targets, it seems that most agree that the current price is probably a bit cheap. The lowest is 60, high of 126, average somewhere in the middle. And personally, I wouldn't necessarily hang my hat on anything the analysts say. They tend to go which way the wind blows on these price forecasts. And frankly, the market can keep a stock lower than expected for longer than expected and potentially stocks can recover much higher than analysts expect in a shorter period of time. So I take these with a hefty grain of salt, but the general consensus does seem to be that PayPal is trading below where it ought to be at the moment. So it makes sense, given all of that, that the analyst consensus rating for PayPal stock is to rate it a buy. Now, caution, don't buy anything just because I like it or just because analysts like it. Before we get into some final metrics and my own price target, make sure that you subscribe to the channel and give the video a like. It really helps me get the message out there, and hit the notification bell so you never miss another video. One thing to factor in, of course, when analyzing PayPal is that the margins have seen some compression recently. Whether it be the gross margins, the operating margins, or the bottom line, profit margins, and free cash flow margins. This is partly potentially because of competition, of course, pressuring them on their gross margins, as well as things like wage inflation potentially hitting them in their operating margins. Now, they have earlier this year announced that they were going to trim headcount by 7% in order to somewhat offset this and get their free cash flow and net profit back up. And, for a dying business, to me, it looks like analysts are expecting pretty respectable EPS growth over the next few years. Now, granted, things can go worse than they expect, but they can also go better, right? Um, when it comes to making my own projections about the future, I usually dial it back to be a little bit more conservative than the analysts, and I also apply an above market average discount rate just to be extra cautious. My personal take on PayPal's valuation, or where I feel comfortable on it, is I really think that below $70, it's probably a pretty good deal. Okay. And I base this on an expected EPS of $5 for fiscal year 2023. That seems to be about where the analysts had put it. Applying a discount rate of 12.5%, giving them credit of their tangible book value because they do have a pretty solid balance sheet. They have a lot of cash on hand, etc. So they deserve that. Very little debt. And assuming 8% EPS growth for the growth stage, which frankly is much less than what the analyst projections were showing. The analyst EPS growth consensus for the next few years, I mean, it was solidly in the double digits. That means over 10% each year, at least for the next 3 or 4 that the analysts were reporting on. So I think dial that back a little bit and say, hey, 8% eventually slowing to 5% is probably more realistic. And with that, you get, $70 more or less. Now, I'm saying, hey, if I can get it even cheaper than that, cool. So I ended up, choosing, 60 as my potential entry point. And I got assigned the shares, 100 of them at $60. And that's good, right? Like, I can beat this up down to what? 5.5% growth and still pretty much, get a 12.5% return at that price. So I think I left myself with a pretty solid margin of safety at that price. But again, just because that makes sense to me doesn't necessarily mean it works for and makes sense to you or to anybody else. It's really all about what you find to be realistic and what you think the future actually is for PayPal. But don't let other people, necessarily dictate what you think. Try to think for yourself, look at the facts, and, make your own conclusions. Make sure, if you haven't already, that you comment below on the video. letting me know what you think about PayPal. Make sure you like and subscribe, of course, and join us on Discord, link in the description. Catch me every Saturday night at 8 p.m. Eastern on Cashflow Kings Live. Link is in the description. Take it easy, everyone. I appreciate you.